Okay, amazing. Yo, guys, I hope you're doing well. So, as every Sunday, you know, I like to do like some technical analysis with you. So, we're going to go through different charts. There are three things we're going to do today. The first one, we're going to be talking about risk management, okay? Because last time when we had a losing trade, a lot of people, unfortunately, burned their account. And I was really pissed because you make good money because 8 times over 10, my trades are good. 9 times over 10, they are good. But when there is one bad trade, no matter how good the other trades are, you're going to lose your money on the long term if you don't have a proper risk management, okay? So we're going to talk about risk management. That's the first thing. Second thing, we're going to go on the news. I'm going to explain to you because I also got a lot of messages. So I want to clear this out. Not clear this out, but I want to talk about it. Why USD, like all the pair related to USD, moved so fast this weekend. And finally, we're going to do some technical analysis. So the first thing I want to do is I want to start with the risk management. Okay. So I'm going to do that. I'm going to do that. Perfect. Boom. Oh, actually, you know what I can do? Widescreen. Yeah, exactly. Okay. So there is one thing you need to understand when you are investing. Risk management is the key. And every time I see people with a £1,000 account trading a lot size of trade, I'm like, what the hell are you doing? This is way too much. So there is one rule for you to understand how and what kind of lot size you need to be used. Let's say you have a trading account which includes, okay, $1,000 or £1,000, whatever. Okay, you have $1,000. Usually, what we aim to do is to risk anything between 1 to 3% per trade. So, if you're willing to invest or take the risk to lose 3% per trade, okay, then it means you're only willing to lose $30, right? If you want to risk 5%, which is a bit high, but some people like to take bigger risk, then you can lose up to $50 per trade. That's the first thing, okay? That's very important to understand. You need to know how much you want to risk per trade. Then you need to know how many pips. So how much is the maximum you're willing to go? What's the in the trade? What's the take profit? What's the stop loss? Let's say, so that's the first information, okay? You need to know how much you want to risk depending on if you get either 3%, 5%, 1%. Then the second thing is, what is the stop loss? Okay, stop loss. Let's say we will have 2 stop loss, okay? One, which is 20 pips, okay? 20 pips, sorry, pips, yeah. Pips. 20 pips is equal to 200 micro pips, okay? You just multiply. And then with those two informations, how much you want to risk and what is the micro pips, you're gonna know what is your lot size by doing a simple formula, which is the risk, okay, risk divided by the micro pipes. I just try to make it very simple for you to understand, yeah? Micro pipes, okay? So here, technically, it's gonna be 30 divided by 200, which give us, so if you do that by a calculator, 30 divided by 200, it means that you're gonna trade, the lot size you're gonna trade is gonna be 0.15, okay? That's very important to understand. You always need to calculate, okay, I'm down to lose you can have bigger account. You see, let's say, for example, you have a bigger account. After this call, yo, I want to invest more. I'm going to put 5 bags in my trading account. Okay. And on 5 bags, I want to lose, let's say 5%. Okay. That's $250. Yeah. $250. Then let's say your stop loss is 30 pips. Okay. 30 pips. Then what you do 250. Okay. Take that information, divide by that one. Sorry, not that one. 30 pips is 300 micropipes. So you do 250 divided by 300, and you can do, okay, 0.83 lot size. That's the first thing about risk management. So guys, if you want, you can take a screenshot right now of this graph. So I will explain again. You take the whole amount that you have in your trading account. What's the percentage you want to risk? Okay. Then you multiply. If it can be 1,000 at 2%, 30, 5,000, you want 5%, it's 250. Okay. Then what's the stop loss? Is it 20 pips? If it's 20 pips, it's 200 micropipes. If it's 30 pips, it's 300 micropipes. And then you just do the risk, okay, how much money you are risking, and you divide by micropipes, and you have the lot size you should be using. That's the first thing, okay? Now, let's say we delete everything. That's the first thing. Then there is something called risk reward. I'm not going to try to get into the details today, okay? Because that's not the topic of the video, but I just want you to go on the course and look. But there is something called the risk reward, RR. It's not a Rolls Royce, it's the risk reward. So, let's say, what are people calling me? Okay. Okay. The first thing is, if you look, there is something called risk reward. Yeah. So let's say there are different type of risk. 1, 2, 1, 1, 2, 1. Okay. That's 3 different cases. Okay. This is something different. And this is something also different. So what this 1, 2 means? 1, 2 means that you need to win 1 trade over 2 to be break even. So that means that on 3 trades, you only need 1 winning to cover everything. So what does it mean? It means that you've traded 40, okay, for 20. It means you need to win a trade which is 40 pips, and then you can lose 2 trades who have a stop loss of 20 pips. Okay, this is important. 1-1 is not very good. It means that you need to win 1 trade over 2 to be break even. Okay, that's good, but it's not. Oh man, listen, how can I block people from plus? Okay, sorry. I don't even know how we. Okay, perfect. 1-1 is not very good. It's more like you're gonna do 1 trade over 2 and it covered the other one. Okay, so it's more risky. It's better to aim for I win 1 trade over 3 and break even than being 20-20, which is a risk reward of 120. And this is the worst. This is the opposite of that. Okay, it means that if you win 1 trade over 2, you are in losses. You know what I mean? You will be down by 20 pips, minus 20 pips. So it's not good. So basically, you can go on the course and search about risk reward, but this is something you can't be looking for 10 pips if your stop loss is 20 pips. It makes no sense. You can't be like sustainable on the long term. Anyway, that was like the quick topic I wanted to discuss about you guys. It's very important to have a good risk reward and a good risk management. Okay. Anyway, that was the first thing. Now we're gonna go and I'm gonna share my screen about the markets. So as you guys know, okay, perfect. If I take all the Euro USD pair, you can see that we had some move these other days, okay? On Friday, 10th of March. Wait, let me just go on the daily. Okay, that was, so Friday, right? Friday, if I go on the 1 hour, you can see that here, beep, start pushing. I'm going to explain to you why. That's going to be after. The first thing I want to do is I want to go through all the charts and see everything. So we're going to do some blanket chart. Sorry, guys, I can't lie. I'm very, very, very tired. The first thing, as you all know, is we always look for the trend. So what's going on? We can see that we used to have a bearish trend, then a bullish trend. Okay, so we can try to identify something like that. Yeah. Yeah, perfect. Then we can go on the lower time frame and just readjust this. Okay. Then you can just go with the resistance and the support around here, around here, around here. Perfect. And then we can go on the 4 hour to have better entry. So if we look at Euro USD right now, guys, you can see that we are in the middle of nowhere. As you know, the market, we only trade based on supply and the demand. This is the only real way to be trading. So when we're near to the support, it's going to be good to get into a buy position. So if I show you this, here you see next to the support was good. Here was close to the support, good. Resistance, good. Support start pumping. Support went up. And now we're in the middle. And in the middle, we can't predict what's going to happen. Yeah. So it might go higher, it might go lower. We don't know what's going to happen. If someone tells you, yo, I know. No, they're lying to you. At that time, we don't know. We're going to wait for the market to drop all the way down, hit the trend, support, and then we're going to get into a buy. Plus, we should have the correlation with the stochastic. But at the moment, I wouldn't personally be trading Euro USD. Of course, there is nothing to do, okay? Euro USD, nothing to do. So stay far away of the pair. Because if you try to trade when we're in the middle of the market, you don't know, bro. You're like a sheep, you know? Here, the big boys, like the big financial institutions can play, they can do whatever you want. But you can't do nothing. You are literally weak, you know, so you can't do nothing. So please just just don't trade, you know, when you're in the middle of the market. So Euro USD at the moment, nothing. Now NZD USD. Now, oh no, I wanted to go on GBP USD first. GBP USD. GBP USD. So GBP USD. First thing we go. So I said I'm gonna delete everything. So GBP USD, we used to have a very nice bearish trend, okay? Then bullish, and now it's kind of consolidating, yeah? So there is not a real trend to draw. On the daily, it was like kind of going down. If we look at this, we're based on those lines, but even that's not really realistic. So I wouldn't even be drawing that. For me, at the moment, if I need to look at GBP USD, I would be more trying something, yeah, like that, and just be, yo, at the moment, GBP USD is ranging, okay? It's like there is a small downtrend, but nothing big. And again, we are in the middle. And as I told you before, I'm gonna draw this again. When we're near to the support, it's a good buy. When we're close to the resistance, it's a good sell. But when we are here in the middle, there is nothing to do. We don't know what's gonna happen, as I told you. So GBP USD at the moment, there is nothing to do. It's like way better to wait, be sure like, oh, okay, it would be gambling. I'm gonna be honest with you. If you get into a buy or sell or whatever right now, it's more like a gamble. It's not something like you know what's gonna happen. So just don't trade GBP USD personally. Just gonna be a waste of your time and probably money, because yeah, you don't know what's gonna happen. So GBP USD, Euro USD, at the moment there is nothing to trade. Now let's see USD CAD. So I said that I'm gonna delete everything. Okay, boom, boom. First thing, weekly. USD CAD. So USD CAD, we have a kind of like bullish trend, as you can see. Okay, every time hitting the trend. Now we have a lot of space. So if you get retrace all, oh, my phone. It can go all the way down, but we don't really know what's gonna happen. Here around the resistance, which is good on the weekly. On the daily, we here at the body. USD CAD, to be honest, you could potentially sell. Why? Because as we can see, previously, we also had that kind of resistance. But the thing is, why? Okay, let me explain to you first why it's a good sell. Hit the trend, hit the resistance, plus consolidating, rejecting, close with a lovely doji candle. This lovely doji candle, with the correlation of the stochastic, is telling us it might go down. But we never know. Look here, we had the same thing and it kept pushing up to that level. This candle was made due to the news. Yeah, that's why it pushed, but anyway, closed down. Normally, this is the resistance. The resistance, the solid resistance on the daily time frame is at the level of 1.38798. This is the best resistance we can find. And honestly, I would wait for USD CAD to push a bit higher, hit the resistance, then we can potentially think to sell. Me personally, I'm not gonna get into a position, into a sell or short. Sorry. You don't understand, guys, the level of tiredness I am. I'm like literally dead. So yeah, USD CAD also nothing, but at the opposite of GBP USD and Euro USD, this one is close to a resistance. So we're gonna keep that pair in our watching list. So those who wonder what is a watching list, is like you have a paper, yeah, having some note next to your computer. You just put like, okay, USD CAD, key level 138798. And then like this, every night you just go and you check when you have some free time. Oh, how USD CAD going? Is it near to the resistance? Is it consolidated? Okay, we have enough information we can get into. But at the moment, personally, I'm not trading USD CAD. Now we can do USD CHF. So USD CHF, again, I'm gonna delete everything. So on the weekly, there is nothing. So what's going up, down, up, down. That week was Maza. We had 6% variation. That's crazy. 600 pips movement in a week. But yeah, USD CHF at the moment on the weekly, you can't find any trend. On the daily, you can't really find any trend. And honestly, it's just ranging, okay? So I wouldn't personally be doing anything with that pair. We have a resistance here. We have a support around here. So now the only thing you can do, you see, you're in the middle of the market too, but there is nothing to trade with USD CHF. Same, it needs to retrace all the way up here, or it has to go down, and then you can get into a buy. So USD CHF, Nothing to. USD CAD. Sorry, we already did USD CAD. Which pair can I do that you guys like? NZD USD. This pair. Okay. So on the weekly, not a trend, to be honest with you. Nothing interesting on the weekly. On the daily. Yeah, that would be more my level. Yeah, you see, NZD USD, nothing really interesting. Maybe something like this. Here we had like some spikes because of the news. And even though you see, we are far, like we're not close enough to the support to get into a buy. We far from the trend. So at the moment, there is nothing to do with NZD USD. I don't know if you realize, but there is absolutely nothing to do with that pair. Now, what I wanted, that was the main topic I wanted to do about the charts. So we are currently the 12th of March, 2023. There is nothing to trade to the different pairs that I show you. Now, what I want to do is I want to show you the economic calendar. Yeah. So if I just do, how can I do this? Okay. So, no, I need to put in English. Okay, economic calendar investing. So economic calendar investing is the main website that I use to watch all of the news. Okay. And if we just go to, so here on the filter, you can go all the way down. You put this to 3-star, which is all the biggest news. Okay. We know in advance which news is going to be big. We're going to take here. So the first Friday of every month, there is the NFP. Yeah. Boom. 3, 4. Apply. Wait. Yeah, sorry. Non-farm payroll. Okay. So the 10, yeah, that was like the 10. We had, yeah, it was the 10 exactly. We had something called non-farm payroll. I don't know why it's glitching like this. Non-farm payroll. Let me open this in a new page for you to understand. A non-farm payroll measured the change in the number of people employed during the period, excluding workers in farming industry. Given that full employment is one of the Federal Reserve mandates, it's very closely watched. Okay, it's a very important news. You can see 3 stars linked to the USD. Reading that, okay, let me explain to you why is important. Every time we have a forecast, so we expect the forecast tell us the economy currently expect 205,000 jobs created, okay, for NFA. So people are, okay. Then if the actual is close to the forecast, it means that, okay, their guess is right. Everything is okay with the economy. It might be seen as a good news or a normal use, no big impact. But when we have a forecast of 205,000 jobs, but the actual number is way above, almost 50%, a bit more, 50% up, it means the economy is currently performing well. And if the economy is performing well, it's a good news for the currency. And it means the currency is getting stronger. So when you have a forecast and you have a higher number, the actual number is higher, this is a good news for USD. At the opposite, if the forecast is 205, but we have 100,000, 100K, it's a bad news for the economy. It's a bad news because the economy is going back. It's not going as well as expected. So it's a bad news for the USD. So let's say here, it's a good news for Euro USD. You know how Euro USD works. If USD is getting stronger, Euro USD should go down. Okay. So let's take Euro USD. Sorry. I'll go on the 1 hour. You see the NFP all the way down. It corrected. If I take GBP USD, okay, after the NFP, all the way down. And this is the thing. Those news can be traded. But if you don't read enough about the economy, you're not going to be able to determine what's going on. What's going to happen with that pair? Is it going to go up? It's going to go down? Like when you trade the news, it's way more gambling. But all these things, even here, you can see Tuesday, 7 March, a big drop. So sometimes you can just wonder, okay, what's going on? Let me see. So 7 of March, okay. We're going to go 7 to the 8th. 7 of March. The Fed, triple L, testify. That was at exactly, there is at 3 p.m. as you can see on the way down. Here it says 3 p.m. And 7. Federal Reserve Chair Jerome Powell is to testify on the economic outlook and recent monetary policy before the Joint Economic Committee, blah, blah, blah. So all his speech is telling us good news or bad news. And here, because you can see that GBP USD went all the way down, it was a good news for the dollar. For the Euro USD, same thing, 7 of March, you can see a big news from Powell. So Euro USD went down. Euro USD got weak, went down because USD got stronger. Bam, bam. Okay, guys. So, guys, I hope you enjoyed this live session that we have done. It wasn't a long one, but I wanted just to introduce you those different things. The first one was the risk management. The second one, the risk reward. The third one, I wanted to go through the charts. And the fourth one, I wanted to show you what's going on, how the news are impacting the real market. And as you can see, this week we had 2 major news that impacted the market heavily, especially with the USD one. So I hope you enjoyed this video, and I see you for the next Sunday.